Students requiring additional review based on program length. Hello, and thank you for taking the time to review this important information. The Office of Financial Aid wants to help you understand upcoming federal student loan changes under the One Big Beautiful Bill Act, also referred to as OB3, and how those changes may affect future borrowing and what tools are available to support financial planning. The information in this presentation is for general planning purposes only, does not represent a final financial aid eligibility determination, and it does not guarantee future federal loan eligibility or funding. Individual eligibility depends on federal requirements, institutional records, enrollment history, program information, and each student's specific circumstances. As we move through the presentation, I'll also walk through two planning tools, the Determining Future Loan Eligibility Guide and the Gap Analysis Calculator. This presentation is specifically for students whose records may indicate that additional review is needed based on program length or remaining time to credential. If you are in this population, this does not mean that a final determination has been made about your eligibility. It means your academic progress, program length, or expected completion timeline may require additional review before future federal loan eligibility can be fully evaluated. Key federal loan changes. Beginning July 1st, 2026, federal student loan rules are changing in several important ways. First, Graduate Plus loans will no longer be available for periods of study beginning on or after July 1st, 2026, unless a student qualifies under a temporary grandfathering provision. Second, new annual and aggregate borrowing limits will apply to graduate and professional students. Third, a new lifetime federal student loan limit of $257,500 will apply. These changes may affect how students plan for the remainder of their program costs, especially students who have relied on Graduate Plus loans or who have borrowed federal student loans across multiple programs or degree levels. Grandfathering basics. Grandfathering is a temporary federal transition provision. In general, a student may be considered for grandfathering if the student had a federal direct loan made before July 1st, 2026, was enrolled in the same academic program, remains continuously enrolled in that same program, maintains federal student aid eligibility, and is able to complete within the applicable grandfathering timeframe. That time frame is limited to the lesser of 3 academic years or the student's remaining expected time to credential. It's very important to understand that grandfathering is not automatic. It is temporary, conditional, and time limited. It can also be affected by enrollment changes, program changes, gaps in enrollment, or other changes to a student's academic status. Additional review. Some students may require additional review because federal loan eligibility under the grandfathering provision is connected to more than prior borrowing. It may also depend on whether the student remains continuously enrolled in the same program and whether the student is still within the allowable time to credential. For students whose records suggest they may have exceeded the published program length, Financial A may need additional information about remaining coursework, expected completion date, enrollment plans, and program status. Again, this is not a final determination. It is a signal that additional review and planning are needed. Why some students may not qualify. Some students may not qualify for grandfathering if institutional records show that they are already beyond the expected program length or do not have remaining expected time to credential. The reason is that grandfathering provision is not unlimited. It does not restart a program timeline and it does not extend indefinitely. It is tied to the lesser of 3 academic years or the student's remaining expected time to complete the current program. For this reason, who have exceeded program length should work with academic advising, the registrar, and financial aid to understand their remaining requirements, anticipated completion time, and funding options. If not grandfathered, students who are not eligible for grandfathering may still be reviewed for federal student aid under the new federal requirements. That review may include program classification, enrollment status, costs of attendance, prior borrowing history, annual loan limits, aggregate loan limits, the $257,500 lifetime limit, and all the other applicable federal and institutional eligibility requirements. The key point is that not qualifying for grandfathering does not automatically mean there are no options, but it may mean the student's future federal loan eligibility is reviewed under the new rules instead of the current rules. New loan limits. For this population, it is especially important to understand the new loan limits. Graduate students will be subject to the $20,500 annual direct unsubsidized loan limit and the $100,000 uh, graduate aggregate limit. Professional students will be subject to the $50,000 annual direct unsubsidized loan limit and the $200,000 professional aggregate limit. All student borrowers are also subject to the $257,500 lifetime federal student loan limit. Students who are close to or over the lifetime limit may need to consider whether other funding sources are available to complete the program. Professional CIP reference. Program classification matters because professional students and graduate students have different annual and aggregate loan limits under the new rules. A program is considered professional for federal student aid purposes only if it aligns with the appropriate professional program category and CIP code. This slide shows the General Professional Program CIP reference. Examples include veterinary medicine, law, theology and ministry programs, clinical psychology and related psychology fields, chiropractic, dentistry, medicine, osteopathic medicine, podiatric medicine, and optometry. If a program does not match an eligible professional CIP code, it is not considered a professional program for federal student aid purposes. That means the graduate student limits rather than the professional student limits may apply.
Determining future loan eligibility. Students requiring additional review should complete the Determining Future Loan Eligibility process carefully. Start by logging in to studentaid.gov and reviewing the full federal loan history. Once you are able to visit studentaid.gov, click on the Login button to your right and log in using your email address. You can also use your username. Type in your password and get through the two-step verification process. Once you sign in, you will see your dashboard. What you'll want to do is click under My Loans and then select Loans. This will bring you to your loan information. In fact, your federal loan information will have information on your total balance, principal balance, outstanding interest, and remaining amount paid. If you scroll down, you will be able to see your loan repayment information, a repayment plan or program you may have enrolled in, your direct loan servicer, followed by a list of all of the student loans that you have ever borrowed from the Federal Student Aid Department. Now, this part is very important as every row is connected to a certain loan type that you had borrowed before. If you scroll to the right, where you see View Loan on each of these individual loans, you will be able to see the principal balance information, any outstanding interest, and the amount paid to debt. What you are looking for to be able to use the Determining Future Loan Eligibility handout, you will need to know the principal balance and the name of the loan or the type of loan. You will want to go through each one of these rows of every loan that you have itemized appropriately. Then what you will want to do is go to the financial aid website of your institution to find the Determining Future Loan Eligibility handout. As you can see, we have already done step one, which was log in using your FSA ID, navigate to your loan history, and then confirm that you can see all of the loans. Second step, understand the loans that count towards your limit. With new regulations, additional loans are counted towards the $257,500 lifetime limit. Use the following table to determine which loans to count in your aggregate lifetime limit. As you can see, you'll want to include the subsidized loan, the unsubsidized loan, and the graduate plus loan. You will not include the consolidated loans, the parent plus loans, or private loans. So again, you want to go back to studentaid.gov and locate the principal amount as noted here. You go view loan, principal amount, and the corresponding number should be here. With your loan history, and the third step is with your loan history in front of you, calculate your combined total for all applicable loan types. So write down the original amount for each qualifying loan, which you can do here. So for example, after entering in all of your loans, like this, below this table, you will see the total subsidized amount and total unsubsidized and graduate loan amounts, as well as the total combined amount that you have borrowed in federal student loans. Below that, you will be able to see the math between, or the difference between your total loans borrowed and the $257,500 lifetime loan limit difference. In this sample, The remaining eligibility comes to $137,500 of remaining eligibility. So once it's calculated, you've done this step and these steps. Consider whether your remaining eligibility is sufficient to complete your intended program. So if your total is less than 257,500, which in this case it was, that remaining amount is your remaining eligibility for the rest of your program. Uh, if your total equals to 257,500, you have reached your lifetime cap and have no additional federal direct loan eligibility. If your total exceeds 257,500, you have exceeded the lifetime cap. No additional federal direct loan eligibility is available. Please note that if you do have remaining eligibility, if you do not enroll full-time starting July 1, 2026, your loan eligibility may be reduced according to your degree of enrollment. This means that if you are three-quarter time or half-time enrolled, your loans will be adjusted accordingly. Also remember that enrolling less than half-time makes you ineligible from receiving federal student loans. It is vital that you communicate any changes in enrollment that occur after the add drop period concludes to your financial aid advisor. If you have further questions, please reach out to your financial aid advisor. This document also goes over your program types and what is professional and what is not. As you will see in the next slide, we will understand and review the gap analysis calculator, during which we will need these uh, annual loan information. Gap analysis calculator walkthrough. The gap analysis calculator is especially useful for students who may not qualify for grandfathering or who may be close to the new lifetime limits. The calculator allows students to estimate future costs and compare those costs against expected aid. Students should enter tuition expected credits, fees, federal loan estimates, private loan estimates if applicable, and scholarships or grants. The calculator will then show whether there is an estimated funding gap. This can help students prepare for conversations about whether they have enough funding to complete their program and what alternatives may need to be considered. This guide is to provide for general information purposes only and does not constitute financial aid advice or a guarantee of eligibility funding or outcomes. Financial aid programs, policies, and individual circumstances may vary. Students with questions regarding their specific financial aid circumstances should contact their financial aid advisor for individualized assistance and guidance. The first step is selecting your school. Once you have selected, you may refer to the academic catalog to take a look at the requirements needed for your degree conference. In addition, you may click on tuition and fees to reference your particular program's tuition and fees. For the purpose of this example, for this presentation, the tuition charge per credit is $300, and 25 credits are needed per year in order to graduate within my program length. Now, disclaimer, the tuition projections use an estimated average annual increase of 3%, but these are estimates and actual costs may differ from year to year. Once calculated in section 3, you'll be able to see the program tuition and fees for year 1, a 3% increase in year 2, another 3% increase in year 3, another 3% increase in year 4. Note that this is based on a 3% projected increase, but it may vary from year to year and from institution to institution. For the purpose of this example, we have used $1,575 as annual fee. Therefore, calculating the estimated cost per year between $9,075 and now $9,770, with the estimated total costs at $37,677. Now we go back to our determining future loan eligibility. We know, for example, that our remaining eligibility for this sample is $137,500. For the purpose, remember the CIP program is a program type based on my area of studies. For this specific example, we are in the optometry field, and therefore our program is considered professional with a annual aggregate level loan of $50,000 per year. So because our total eligibility remaining is $137,500 at a $50,000 annual aggregate cost of $50,000 a year, another $50,000 in year 2, totaling to $100,000 with a remainder of $37,500 that would cap my lifetime eligibility. Therefore, if federal loans are the only funds that I am expecting, and I do not expect to borrow private loans or to receive scholarships, the below will show our funding gaps. So the first year, I will be able to receive $40,925 to go towards my other cost of attendance or to save in the future year. At year 2, I will have, again, a difference of $40,700 that I can then save for when I have less later on. Year 3, I will have an extra $27,968 that I will then be able to save for when year 4, I will have a gap of $9,770. This is where it becomes very important for you all to understand how important it is to not spend all of the difference in financial aid that you have. Because for this scenario, this particular student would need to save enough money to be able to cover their last year if they're in the 4-year program. If they're in a 3-year program, they could potentially use the remainder of their eligibility towards other portions of their cost of attendance. For example, housing, board, food, transportation costs, books and supplies, and personal or miscellaneous costs. If you take a look at the section under the funding gap, the estimated payment plan amount, for year 1 through year 3, your costs are covered, so you don't have to worry about a payment plan. However, on year 4, you'll see that you'll have a funding gap of $9,770. And if you did not save in the prior years, what you would need to do is take a look at your other options, either borrowing from a private lender, right? Looking for scholarships and grants, or signing up for a payment plan. Now, each plan, this estimated plan, splits the annual gap evenly across the selected numbers of terms, then into equal payments per term. Regardless of payment plan status, however, be aware that all balances due for a term must be paid within 90 days after the add drop has ended. The payment plan amounts indicated are estimates based on the calculated figures, but may not be accurate to the actual costs owed and are just for example purposes. If you would like additional information about estimated payment plans or individualized payment plans, please contact the Office of Student Accounts.
Funding options. If a funding gap remains, students should begin exploring additional options early. This may include scholarships, grants, institutional opportunities, VA benefits, private or alternative loans, payment plans, employer tuition reimbursement, fellowships, assistantships, or personal resources. Students should also review whether their program completion plan is realistic based on remaining coursework, costs, and available funding. Financial aid can help students understand funding options, but the institution cannot guarantee that alternative financing will be available or sufficient. Student Action Plan. Students requiring additional review should take several steps. First, confirm remaining program requirements, coursework, and expected time to completion with academic advising or the registrar. Second, review your complete federal loan history on studentaid.gov. Third, complete the Determining Future Loan Eligibility Guide. Fourth, use the gap analysis calculator to estimate whether a funding gap may remain. Finally, meet with financial aid to discuss your individual situation. Students should not wait until the start of the term or until charges are due to begin this planning process. Disclaimers and support. As a reminder, this presentation is for planning purposes only. Federal guidance may continue to evolve, and individual eligibility depends on many factors. The institution cannot guarantee federal loan eligibility, grandfathering status, graduate plus eligibility, private loan approval, or sufficient funding to complete a program. Students should work closely with financial aid, academic advising, and the registrar before making enrollment decisions, program changes, or assumptions about future funding. To close, students should take action early. Review your complete federal loan history on studentaid.gov. Complete the Determining Future Loan Eligibility Guide. Use the gap analysis calculator to estimate any potential funding gap. Confirm your program length, remaining requirements, and expected completion timeline. Before making enrollment or program changes, speak with financial aid and academic advising. We understand that these federal loan changes may create questions and uncertainty. Our goal is to provide clear information, help students plan ahead, and support students in understanding their options.